Hello everyone, welcome to this lesson. Now in this series we are going to look at the structure of pricing or the structure of price as it is depicted on the charts that we look at. So we are going to look at something that is called swing high and swing low, which will come in handy when we get into further lessons. So here we need to define what we call price swings in terms of a swing low and a swing high. If you open up any chart and a candlestick chart in particular, you'll be able to see that price moves in a sort of zigzag fashion, either going up or going down. Within that structure, there is what we call a swing low price or a swing high price. So as we look at those peaks and troughs or highs and lows, we need to usually pinpoint the lowest point that the price makes or the highest price point that the price makes. So in this case, we need to define what we call a swing. If we look on these green candles, you'll see that there's a black dot which marks the candle which has got the highest price, or which is prominent than the other in terms of the height that it managed to achieve. This is the candle that we would call the swing candle. So in this case, because it's a swing high, it would happen where price has gone higher than the candles that are close to it. Ideally, you would consider a price movement to be a swing high if the candles that have formed before that swing are lower than that candle. So in this case, if we are looking at this particular candle, we are saying were the two candles before it lower than it. So here we can see it was at this point. This candle is lower, this one is lower. Then we also need to consider the candles after it. Are they lower than the candle? Yes, we can see this one is lower and this one is lower as well. So this qualifies to be a swing high because it has got two lower priced candles before it and two lower priced candles after it. So that is how we define a swing high. However, depending on what you prefer, you can have maybe a rule to say, I will define a price point as a swing high if I have got three candles that are coming before it that are lower. So in other words, you're looking for three candles here instead of two. Another person can say they are looking for maybe one candle. So they are looking for one candle on this side and one candle on that side to define their swing high. The number of candles that you choose preceding and after the swing candle, it can be anything that you are comfortable with, but make it something that you should be able to pick easily when you open a chart. In other words, when you open a chart and see it, you should be able to pick immediately to say, that was a price that I would term a swing high because it's visible to you. It fits the time frame that you have chosen. You don't want to go and start counting to say, I need to see 5 on this side and 5 on that side. The more you get, the more ambiguous it's going to be when you're trying to read. For myself, I try to work with 2 on either side of the candle. Sometimes I can go for 1 on either side of the candle, but I try to remain with those rules that I have set for marking those price swings on any chart that I open. Now, because we have defined that the two candles must be lower than the price point for a swing high, it doesn't necessarily mean that we have to see this V-shaped formation. Here we have got variance that we can accept as swing highs. Here in this case, you have got this candle is higher than the one which is immediately before the swing. But we are accepting it because when we look at these two candles in relation to this one, they are both lower. The same applies with these ones, they are lower as well. Sometimes it can form something like this, whereby you've got the outer candle is higher than the inner candle, and also the same applies on this side as well. However, this will still be a swing high. Then you can have candles that are reaching the same height on either side, and the swing candle is the one which is standing out. We also accept that as a swing high. Now on the opposite, we have got a swing low. We would define a swing low as a price point whereby the preceding two candles are higher than the swing candle, and the following two candles are also higher than the candle. So for the swing high, we were looking at the price point being higher than the two candles on either side. For a swing low, we are saying the price point is lower than the two candles before and after. That is how we define a swing low. Now, like the other variants that we got for the swing high, we also have the same for a swing low. Now here I've put in a green candle to show that it doesn't necessarily have to say I'm looking for a red candle, then I would consider the swing as a swing low. Sometimes you can have a green candle, but when we look at that green candle in relation to the swing candle, we can see that the price was higher than the swing candle. Even if you go to this side as well, you can find that there would be a red candle here. But the important thing would be that that red candle is showing us that the price was lower than the swing candle. So it doesn't necessarily have to follow this example that you get green, 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 green on either side, or a red, red, red on either side. What matters is the rule of saying the price should be either lower for a swing high or higher for a swing low on either side. That is how you would look at the charts. So now this is a chart that I've picked for Sanlam on a 1 week time frame. And as you can see here, I marked the red where I consider to be a swing low. So if you check here, I've got this candle and that one. They are higher than in terms of price than the swing candle. Then we've got a green one and a red one, but both are also higher than that one. So this one I'll consider it as a swing low. Then we have got this one whereby we have got these two candles are lower than the swing candle, and the following candles are also lower, so I would consider this as a swing high. So using that rule, you would see I would go from here to there if I'm following those dots to there. So if you put a line on these ones, you would see the zigzag movement. If you want, I could have marked this as a swing high. So you would see the zigzag movement. Now that zigzag movement would show you whether the share is in a strong uptrend, a strong downtrend, or it's in a sideways momentum, like this one. We are seeing this portion here. You can see that this one would consider it that the price was ranging because the swing lows and the swing highs are not very far apart in terms of price difference. But then when we move from this point to there, we can see that the price moved consistently in an upward direction. So much that I didn't want to waste time trying to find a swing low and a swing high within this portion. So I went straight to the highest point and I would say that's my swing high. Then I would go to this one and say this is a swing low point, then another swing low point and a swing high point. Alternatively, one can decide to say I'm going to go from here and straight to this one because it's almost a similar pattern that we had on this side going to this other side. Then we move here between swing highs and swing lows, and we can see here that the price went back into a range up to maybe this level. then it started going on a downward trajectory. So you need to open charts and try to see these swing highs and swing lows. As we move to the next lesson, we would look further at these swing lows and swing highs and how they form our decision making in terms of interpretation of the price charts as we look on the markets. Thank you. Until then, ciao.